So the stock market just ended off the week on a pretty strong note, with the S&P 500 closing up about $11 on the day, and the Nasdaq and the Dow both up about $60 to end off the week. And in this video, I want to talk more about the markets, and in particular the S&P 500, and whether or not there's a double top forming, maybe a head and shoulders pattern forming, and whether or not there could be more downside here in the next couple of weeks when it comes down to the overall stock market. And as always, I'm going to be sharing with you all what I've been trading, what stocks, what ETFs, and kind of how I'm looking to position myself as of right now in the stock market. So if you guys enjoy the video, hit that like button for me, consider subscribing to the channel, and also feel free to join our Strive Smart Discord chat and Facebook group, link down below in the description box, free of charge to join. So at a first glance, the S&P 500, it's clear that many things are happening, right? We're recovering quite quickly from the low at 2190, and to be exact, we've recovered up to this point about 22%, and at its highest, the S&P was actually up about 25%, right? So we're up quite drastically over the past couple of weeks, and we're in an uptrend. We're quite frankly in an uptrend on the S&P 500, but we're also seeing a huge bearish resistance, a double top forming here at about 2950. Notice how towards the end of April, we failed at 2950. We pulled down. We held this original uptrend here, as you guys can see based on this trend line. If I zoom in a bit, you'll be able to see it a bit better. We held that, and we tried breaking out of 2950 again, right? But we failed. That is where we saw the double top. And again, a double top is a bearish pattern. This was huge, guys. The fact that we didn't break 2950, if we did, we probably would have hit 3,000. That would have been very good for the bulls. And from there, we on the flip side, we ended up going under 2,900. We broke 2830, which was a support from a couple days ago, a couple days prior. And this is really where we saw some more bearish pressure. A lot of the bearish pressure started kicking in under 2,900. And right now we're actually holding this other uptrend that I have drawn out right here. So a lot of things going on. And on top of that, we also have a potential head and shoulders forming. Notice how here on the beginning of April, from the beginning of April rather, all the way towards the end of April, we formed this left shoulder. And from the end of April to about the middle of actually May, up about till about 3 days ago, we formed the head. The head is where we hit 2950 and we double top there at 2950 again, and we sold off. That's what ended up forming this head, right? And if we form this right shoulder, this would be very, very bearish, guys, overall, right? We might end up dumping down, let's say, to 2,700, maybe the low 2,700s, and maybe even into the 2,600s. And at that point, we'll be making a macro head and shoulders pattern. We see the mini head and shoulders within the head and shoulders, but at that point, if we scale back a bit, we can see, okay, the left shoulder might be from the end of March up until the beginning of April. This huge little hump here from the beginning of April towards right now could be the head, and then we might sell off and pop and recover again, and that could be the shoulder. So many things could happen here, but quite honestly, guys, to the downside, I'm thinking if 2,800 breaks, the next spot would be 2,730, and 2,730 is very critical. If we break that level on the S&P here, watch out below, because we may be going 2,600 from there, 2,630, 2,620, and maybe even lower down to about 2,450 to 2,500, right? And from there, guys, we may be going out to test, or rather take out those lows. But let's not get ahead of ourselves, because we're not even close to those levels. We have to break, first and foremost, this uptrend right here, 2,700. And if we start creeping down below that, that is where things could get bloody yet again. And when it comes down to the Nasdaq here, guys, it's continuing the uptrend. It's not looking like a head and shoulders. It's not looking like a double top. And this is mostly because tech big tech, Microsoft, Google, Apple, Amazon, Facebook, they've been doing very well, and the Nasdaq being a tech-heavy index, it's benefited a lot from that. It's benefited vastly from that. So this is uptrending. As long as we hold 8,900, 9,000, it's uptrending, and if we break out of 9,200, this resistance, we may be taking out that 9,500 level, 9,600 level, who knows, right? And when it comes down to the Dow, we're noticing a very similar pattern to the S&P. Left shoulder potentially ahead here, and maybe we form a right shoulder in the coming days, coming weeks in the markets. And overall, guys, we're seeing a strong resistance on the Dow Jones overall at about 23,900 to about 24,600. And until we break out of there, I think the bears are in charge. And again, you can see the little head and shoulder within the head and shoulder. And quite frankly, the Dow Jones is it looks like it already completed the head and shoulder if we're looking on this 30-day chart, the little mini head and shoulder within the head and shoulder. So you can see it here, left shoulder, head, right shoulder. So the markets are in a very interesting spot as of right now. The Dow, S&P, watch out for the head and shoulder there. Watch out for the further downside, but the Nasdaq still, it's crushing it, guys. Let's be honest. The Nasdaq is still crushing it. Big tech is still crushing it, and until big tech comes down, I think the markets are going to remain up, remain strong, right? We might not see another leg down until the big tech comes down, and that's a big if, and we might not see that happen. Who knows, guys, what is going to pan out over these next couple of weeks. And I'd love to know down below in the comments, what are your thoughts there? But overall, those are my thoughts. And to kind of combat the risk here, the uncertainty, what can you do? You can stack up cash if you're able to, right? If you have your emergency fund set in place, all of that stuff set in place. For an investment account, I think it's wise at this point to stack up cash for it, because if the market does take that hit, guys, if that head and shoulder does end up playing out to the fullest capacity, we get that bearish move, you'll thank yourself if you have cash, because you'll be able to take advantage of companies that fall down on maybe the next leg down here in the market. So those are some thoughts there. Again, I'd love to know your thoughts down below in the comments. Now, as to what I've been doing, I ended up selling out of GDX today. I locked in a profit heading into the weekend on this very, very strong move to the upside here. We had a move of about 4% today. It ended up going up $1.41. And if you guys have been following the channel, I've been saying how bullish I've been on gold stocks. I've been very bullish on gold stocks over the past couple of weeks, and I've been trading in and out of GDX like clockwork, both shares and options. And yesterday, I actually ended up getting in at about $34.20 on this massive bull move that we saw. Notice how we were trading in this wedge on GDX. On the 20-day chart, you guys can see it. And once we popped, this thing ran, and it ran to the moon pretty much, guys. So I put in a limit at 34.20 yesterday, got filled there early in the day. And today, I actually ended up selling out a bit early, guys. Today was one of those days I sold out a bit early, but it was right at about $36.05, I think, is where my limit hit. And you guys can see it ran all the way up to $36.70, but that's okay, because next week, I'm actually looking to re-enter GDX, but I just wanted to play it safe, lock in the profits heading into the weekend. And when it comes down to the percentage gain that I saw on the move, it was around... let's see, because I forget off the top of my head. Right around 5% is the move that was made, and that's another reason why I wanted to lock it in, guys. 5% in a day swing trade, that is really good. So overall, that is what I ended up doing in the markets today, guys. Nothing crazy, and my stance on gold stocks, still remains the same. Just because I sold out, locked a profit, it doesn't mean I'm bearish now. Again, I'm still bullish, but I'm just looking for a better re-entry next week on a pull down. Hopefully we get a pull down, maybe to, let's say, 35, 50, 35 bucks. That could be another entry point here on GDX. And actually, I almost forgot, I'm still holding Virgin Galactic as well, ticker symbol SPCE, but I am down a little bit, quite a bit actually, on this position, as it is at about $15.60 per share as of right now, and I did end up buying at about $17.80. And this is a spec swing trade. I do plan on holding it for a couple of months, so I'm not too worried about it, guys. I don't have a lot of money in it. I'm actually looking to average down, so at this point, I'm just looking at Virgin Galactic as a hold. So let's talk about some other stocks here I'm looking to trade. Let me know in the comments what you guys did, what moves are you looking to make, and would you take a look at ACB? We're going to use some code words here so I don't get demonetized, but this is an MJ company. I actually own it as a spec play in one of my long-term investment accounts. I'm getting crushed in that stock, by the way. We'll talk about it in a second. But today, it was up 70%, guys, up $4.56. Insane. And they just actually saw a 1-to-12 split, or a 12-to-1 split, actually, or wait, 12-to-1 split, 1-to-12 split, I don't know. I'm confused right now. I just confused myself, but they saw a split, right? This stock was actually 90 cents or something, 60 cents, and then they split it back up, and I actually bought ACB a couple months ago, I think at about $2. So I was down 60-70% on this little spec play. I don't even have much money in it, quite honestly, guys. I think it's about $500 to $1,000. And what do you know? Up 60-70%. It's finally coming back up. I'm starting to recoup some of those losses. And why is that? It's because ACB is doing pretty decent over there in Canada and in Europe. They actually had Q3 kilograms sold of 12,700 kilograms sold versus the 9,500 in the previous quarter. And we've noticed how the trends right now are people are hoarding the MJ across Canada and Europe due to the whole CV situation. People are they're hoarding the stuff. It makes sense. It's kind of like the toilet paper. It's kind of like the paper towels, right? People are hoarding this stuff. And it's obviously for recreational reasons. Some people are hoarding it, but a lot of it's for medical reasons as well. People need this stuff for their pain, for this, for that, for their different reasons. So that makes sense there. And the recreational sales actually rose 24% to about 41.5 million, and net sales came in at 75.5 million, up about 35% from the last quarter. So across the board, a pretty solid report here from ACB, kind of shining some light, to the future here, because this company, the whole industry, has been crushed. So we're seeing some decent demand here, as the trend has been, oversupply, right, of the MJ stuff, that puff pass stuff, right, guys? And now that we're seeing some demand, this is really solid, right? Because again, the overproduction has just been slaughtering the stock's price in general. So let me know down below some thoughts on ACB. I think this is a very good news. The technicals here on the 4-hour chart, they're clearly breaking out, so we could see some more upside in the near-term future, despite the stock being up 70%. Guys, you have to realize this stock has been crushed recently, so there could be more upside. I personally think here, maybe back up to $13, maybe 16, 17. These are some resistances coming up here in the near-term future. And another stock, CGC. This is another MJ company, up about 14% today, up about 2%, or rather $2. They're also reporting earnings here towards the end of May, and they can also be a breakout stock if we do end up getting above, let's say, $15.60 to about $16. This is a resistance here, right? So we may see a move, let's say, close to maybe $18, $18.50, as that is a pretty strong resistance from a couple weeks ago and back in February as well. So keep an eye there on CGC. And some other stocks that crushed it today, guys. Nvidia. This one is just a different beast, guys. Nvidia hit another all-time high today, up to $340. It went up 6%, up about $18.40 on the day. And if you guys didn't know, they're actually reporting earnings here on the 21st, which is at some point next week. I believe that might be either on Wednesday or Thursday or something like that. So keep an eye on earnings. This will definitely fluctuate the stock even more. And quite honestly, the bulls are so heavily in charge here. We pulled down, we held 315, old resistance, new support. We held the 50 SMA, we catapulted off of that. Now we're all the way up to 340. So for me, am I forcing it, guys? No, but I'm looking to see if we get a pull down. Maybe after earnings, we could end up getting into a position here. We'll see how it ends up going with ticker symbol NVDA. And another stock was SQ today. SQ broke a critical level at about $78 to about $79. And I talked about this yesterday. And I said, and I'll say it again, there is a lot of potential in Square. Bulls, a lot more bulls could come in if we break 80. And now we broke 80, and we could end up, filling the gap up to maybe $82, maybe $85. This is where the stock could be going in the short term. And although you have to take analysts' opinions with a grain of salt, Square, a lot of analysts are raising their price targets. And same exact thing with Nvidia, guys. Many analysts are raising price targets, and that could be a fuel to the fire at the end of the day for these stocks. And another one that could be at a potential floor right now is Nike, ticker symbol NK. Notice how we're in the middle of this channel, but overall we held $84 to $85 as a support. Now we're starting to rip back up into the high 80s. So for this week, guys, maybe a move from 87 up to, let's say, $88.50 to $89. And if we break $88.50, a move up to the low 90s. That's kind of what I'm looking for here with Nike. And quite frankly, this is a textbook horizontal pattern. Notice how the previous couple times we've held 86, 85, we've rallied up to the low 90s, so I could definitely see that as a high probability move. As long as the markets stay green, stay healthy on Monday, Tuesday, I could definitely see this happening on Nike. And Facebook is in a similar situation where we kind of found a bottom here at about 202. We're rallying back up now to the 210 level, and if we end up maybe going up to 215 and breaking out, this stock could be moving up to the all-time high, which, if I recall, is around 220, right? 225. So keep an eye here on Facebook. If it rips up, guys, 215, it could end up going even higher from there. So overall, that is it for today's video. I hope you all did enjoy it. If you did, feel free again to leave that comment, that like, that subscription. If you guys want to see content like this, going over the market every single day throughout the week, talking about stocks that are moving and so forth. And if you actually want 2 free stocks from Webull, they brought it back to 2 free stocks. A couple days ago, they cut it to 1 free stock. Now they're back to 2 free stocks. If you want the free stocks valued up to $1,400, that is linked down below in the description box. All you have to do is put in $100 and you get the free stocks there. And that's pretty much it, guys. I'll catch you all in the next video. Stay safe out there as always. New video coming tomorrow, actually, so stay tuned for that. Peace out.